Hello, everybody. This is Alan Elman, the Blue Collar Investor, welcoming you to another video in our educational series. This one is titled, How to Set Up a Cash-Secured Put Trade, a Step-by-Step Process. We're going to be using a real-life example with Tenet Healthcare Corp. Listed on the New York Stock Exchange under the ticker symbol THC. I previously recorded a similar video for covered call writing, and a lot of you had asked that I do the same thing for cash secured puts. I'm happy to do so, and here it is. Let's get started. In this video, we're going to cover stock selection and the rationale behind it, option selection and the rationale behind that, initial pre-trade calculations and how that impacts our trade decisions, and finally, trade entries and actual initial trade calculations. So let's start off by what underlying security are we going to use, stock or exchange traded fund? In this particular video, I'm going to be using Tenet Healthcare, which you could see in the screenshot was part of our BCI Premium Stock Report at the time that I'm creating this video. So why did I select this particular security? Well, first of all, we know it's an elite performer if it endured all of the rigorous screens in the BCI methodology. Now, it was in the medical industry segment, and I was not overloaded in that particular industry, which happened to be ranked A at the time. The mean analyst rating was 1.43, which is spectacular, considering that 1 is the best and 5 is the worst. Also, money was flowing in from the institutional investors in a bullish way, and the on-balance volume was bullish. You see the up arrow there in our report. Now, as far as the implied volatility of THC, 29.6, which makes it robust, but not super risky. Also, the earnings report was 10/23, which expired after the October contract expirations of 10/18. And finally, you can see here that THC had been on our BCI Premium Stock Report for 16 consecutive weeks. So for 4 months, it's been a very, very strong security. Now, other resources we offer our premium members include our monthly blue chip report, which are the best performing Dow 30 stocks. We do that every month for our members. And another weekly report, in addition to the stock report, is our exchange traded fund report of the best performing ETFs that are outperforming the market in general in both 1 and 3 month timeframes. So those are the resources we offer our members. We're going to use THC from the premium stock report. Okay, let's go to the option chain now on 9/23 for THC. Remember, we're looking at puts now. At the time, THC was trading at 166.81. Now, in the BCI methodology, we pretty much stay with out-of-the-money put strikes, lower than current market value. So we could look at the 165 slightly out of the money, the 160 deeper out of the money. The 165, you could see a bid price of $4.30. And the 160 deeper out of the money, but less risky in terms of exercise, 250. So in this particular video, I'm going to show you the 160 deeper out of the money strike, a little less premium return, a little less risk. You could see that there were 588 contracts of open interest, so there was a lot of investor interest in this particular option. Now, folks, these are the initial pre-trade calculations before we make our decisions, before we go into our brokerage account and start trading. So the final trade is going to be usually going to be a little bit different. It could be exactly the same, but that would be rare. But it'll be a little bit different, but very, very close. Typically, as long as we do our pre-trade calculations and then move right into the brokerage account to calculate our actual trade results. So here we go. THC was 166.81. We're going to look at the deeper out of the money 160 strike at 250. The trade management calculator, which is an absolute must if you're using these strategies, tells us that if taken through expiration, it's a 26-day trade. And in the brown cells is the meat and potatoes of our calculations, a 1.59% 26-day return, and that annualizes out to over 22%. Now, in the purple cell here, you see that if the put option is exercised and shares are put to us at 160 and a break-even price point of 157.50 after we deduct the put premium, we will have purchased it at a discount of 5.58%. So those are the two outcomes, 1.59% income or purchasing it at a discount of 5.58%. Now let's go and actually trade this. And you can see here that THC was trading at 167.36. It went up a little bit from when we were investigating, right? Now I'm going to stay with that 160 strike, which expired on 10/18. What are we doing? We're selling to open. We're going to putting in a limit order. Now you see the spread is 235 to 260. So I'm going to put in a bid price of 245. Now, if I get it, I made another $10 a contract. Okay, and we're actually leveraging what's known as the show of fill rule, a little bit beyond the scope of this video, but it is in the material I'll be alluding to at the end of this video. Okay, now let's go in and see, yes, in fact, I did generate the 245. I did get it. You could see the bid price was still 235 when that happened. So 245 is the number we got. Now, once we do that, for puts, we also have a 20%, 10% guideline, as we do for covered call writing, but the rationale is a little different. This is if the price of the put goes up, causing the value of the put premium to go down. They're inversely related. Share price and put value are inversely related. That's why when you look at delta stats, there's always a minus sign in front of the delta. Okay, well, anyway, if the price of the stock goes up, we could buy back that put at a low price and then use the cash to start another trade. So we put in that 20% guideline. What's 20% of 245 is 49 cents right there. And it's not a day only trade this time. It's good until canceled. Now, 2 weeks before monthly contract expiration, we changed that to 10%. That would be 25 cents. All right, well, that is explained in my material, but that is the process. Now let's use the trade management calculator to get our actual real life initial trade calculations. Now you recall at the time, THC was trading at 167.36. The deep out of the money 160 strike generated 245. That's what we got. Still a 26-day trade. Now the results are 1.56 and 21.83%. It's just a drop lower than before, but pretty much in the ballpark. And the purchase discount price is 5.86. So you could see that all this is pretty similar to the pre-trade, not precisely the same, but those are the two possibilities. A 1.56 26-day return, or buy the stock at a discount of 5.86%. Let's summarize. Cash secured put trades are represented by a three-step process. What stock are we going to use and why? What option are we going to select and why? And then once we enter our trade, we immediately go into position management mode. What I showed you was just one of the many exit strategy setups that we use, and that was with the 20%, 10% guideline. But as I said, in my new exit strategy book, there are 27 chapters of exit strategy information. I'll show you that in a moment. Now, trade decisions are based on what is our overall market assessment. We took a little bit of a defensive trade with THC by going to the deeper out of the money 160 strike. Could have gone with the 165 strike if our market assessment was bullish. What is our personal risk tolerance? Maybe we want to go defensive all the time, or maybe we want to be aggressive even if the market tone is not super bullish. And what is our pre-stated initial time value return goal range? 2 to 4% is an example that I used. You actually saw in this one, 1.5%, a little more defensive. What is right for you? Only you know the answer to that. Now, what are the three potential outcomes? Well, we generate positive cash flow. That's the first step. We generate income. That's step one, right? Or if we allow exercise, and it is up to us because we can always buy back the option, well, then we're going to purchase the stock at a discount as it relates to the price of the stock when we enter the trade. Can we have a loss? Yes, we can. We can have a loss if the price drops below the break-even price point. And these scenarios are mitigated by our exit strategy skill set. All right, so how do you master these strategies? Go to our website, thebluecollarinvestor.com. Right adjacent to our membership link is our store link, and then go to best packages. Our main package is our BCI package, which is an acronym for our best and most comprehensive investment package. It has 18 components, 6 online video courses with downloadable workbooks, 6 calculators created by the blue collar investor, found nowhere else, 5 of our best-selling books in ebook format, and most of all, our premium membership, the annualized 13-month membership, which includes the 3 reports I showed you in this video, plus 1 more on dividends, along with over 250 training videos and dozens of downloads and resources. The second of our best discounted packages is our trade management calculator package. I showed you the trade management calculator in this video. You must have it for covered call writing and selling cash secured puts. It includes that spreadsheet along with its 28-page user guide and the PDF version of my 8th book, Exit Strategies for Covered Call Writing and Selling Cash Secured Puts. And as I told you, 27 chapters of exit strategy information. Now, the third of our best discounted packages is our CEO package. It's an acronym for combining exchange-traded funds with stock options. It includes 2 spreadsheets invented by the blue-collar investor, one's to help us set up our portfolios, and the other one to help us archive our results. It also includes a PDF version of my 9th book, Covered Call Writing, A Streamlined Approach. This could be a very important resource for those of you with busy schedules. You want to generate income, but you don't have much time to dedicate to it, so we have a blueprint for you for that. Now, when you go into the CEO package, you have 3 choices. You can get the basic package, you can combine it with TMC, or you can combine all 3 packages and get absolutely everything offered by the blue-collar investor, with the exception of any mentoring if you want to do that program. But everything else is in that package, and it is our best offer. You can also go into the store and build your own toolkit and get items individually. Ladies and gentlemen, that ends this educational video, how to set up a cash secured put trade, a step-by-step process. Folks, I hope you enjoyed this video, but most importantly, I hope it puts cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.